The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, we haven't talked about aggressive growth stocks in a while, so we called our aggressive growth stock strategist, Brian Bolan, and just let his radar run amok and see what it came up with. And the results are in.
Yeah.
In no particular theme setting here. CYBR software.
Yeah, and definitely run amok is probably the theme that we should have used, because right now the markets are in a good bit of turmoil. We've seen a significant decline in the markets over the last several weeks, and especially the last couple days.
Yeah.
And one of the reasons that I picked CYBR was because of its performance yesterday during a very big down day in the tech market.
Yesterday, September 28th.
Right. So the NASDAQ was down over 3% at some points intraday, but CYBR really didn't move. And they do that cybersecurity thing, and it speaks to the institutional buyers of this stock. They're not willing to sell at this level, and that's why the price of this stock wasn't going down so much that day. Today, the following day,
29th of September.
The 29th of September, we're seeing a little bit of weakness here, but if you compare it against the market, obviously there's a lot of strength here.
And at the time we're talking here, the market still hasn't closed.
Right,
so.
right. It is a Zacks rank number 1,
okay.
So that's what we're looking for on all these aggressive growth buys here. The style scores are a little bit off on this one, a D on growth and an F on value. So not your best style scores, but what's going on in the market right now, a lot of the style scores are pretty weak, just for the most part.
Okay.
The valuation here is pretty stiff, so it's pretty expensive stock. If you look at most of these metrics with 100 times forward earnings, we are going to see 6% earnings growth this year, and that's against a contraction of earnings growth, so a negative 2% for the industry for this year. But next year is when we're really starting to see the needle move. It's going to see 30% earnings growth. And when you see something like that, that's going to really move that PE multiple down significantly next year. So you're paying a lot right now, but the idea is over time that should decrease substantially.
All right. Then you also found Isle of Capri, casino stock.
Right. And, the casino stock, this one was hit yesterday and a little bit more than the market. I think I wrote down on the presentation here on the slides that it was down 6% and it was down 6.8%. It is that number 1 Zacks rank, so we do see earnings estimates moving up, and we do have decent style scores here. We got a growth of B and a value of B, but there's been a lot of stories that the consumer is pretty strong here. Unemployment rate is pretty low. People have jobs. The consumer stocks have been doing okay. So this is one of those plays that, when there is going to be that rebound, this is going to be one of those stocks that's really going to rebound pretty well. When we take a look at the valuation at only 15 times forward earnings, we really like to see that, because you're paying also then well below the industry average of 23 times. At the same time, there is minimal revenue growth coming up for Isle of Capri. And, just when you talk about all those casino operators, they are, again, that vulnerable area right now in the midst of a sell-off. But I would expect them to bounce back significantly because of their valuation and because the consumer segment area has been pretty strong.
More spendable income.
Exactly.
All right. Own either of these two?
I do not.
All right. Check out more stock information on our website, Zacks.com. If you're not there already watching this video, you can link to it all off the homepage. With Brian, I'm Terry Ruffolo.